Hello, everyone, and welcome back to the Bold Time Investor, the show where we cut through the noise to help you stay confident, stay invested, and stay informed. I'm Corey Marlowe here with Scott Hartman.
Hey, Corey.
And Adam Johnston.
Gentlemen, how are you?
We make up Financial Partners, Inc. And today we kind of wanted to tackle a fairly timely and probably potentially transformative topic.
For sure.
The recently passed federal tax bill. Being called with no shortage of flair, the big beautiful tax bill.
Big beautiful.
That's right, Corey. As financial advisors, we're less interested in the headlines, and we're really more focused on the implications for us and our clients. The bill is sweeping. It's big. It's beautiful for sure. So, and it touches everything from individual tax brackets to estate planning and even some business deductions.
Yeah, and there's a lot of moving parts to this this legislation. So today we're going to try our best to break it down for you, what it is, how it might impact your financial plans, and steps you could even consider yet this year to implement.
Yeah, so let's start with kind of some of the key features of the tax bill. Scott, let's kind of start with the individual side of things, right?
Sure.
Like, so what are some of the major changes can expect for, individuals and families?
Yeah, the biggest news is the reduction in marginal tax rates across several income brackets. For example, the 22% bracket's been lowered to 20, 24% bracket to 22. That may not sound like a lot, but over time it can mean thousands of dollars in tax savings, especially in dual income households.
Yeah, and we also got an expanded standard deduction. Now it's up to $30,000 for married couples filing jointly. So itemized deductions are still available, but those changes are going to simplify taxes for a lot of married couples.
For sure. Another win for families would be the child tax credit. It's been increased to $3,000 per child and is now fully refundable. That's a direct boost, I would say, for middle income families for sure with children.
What about like just more related to kind of, our industry, the wealth management, individual investments, things like that? What talk a little bit about capital gains, investment related taxes, some of those things.
Yeah, so there was a favorable long-term capital gains rate adjustment here. So 0% capital gains rate up to $100,000 in household income. So that opens up a great planning opportunity, especially for retirees or those who've taken a gap in income.
For sure.
Yep.
There's a new incentive around qualified opportunity zones also. If you invest gains from a sale into these zones, you can defer and even reduce future capital gains. For sure.
That one's still a little murky for me, but there could be some, pretty big opportunity. If
I think we'll know more. Yeah, for sure.
Central real estate market, things like that. Yeah.
Yep.
There's definitely a lot of underlying additional items you have to follow on those.
Yeah, exactly. Yeah.
For sure.
So let's kind of move on, just breaking out the tax bill a little bit more. Let's talk about maybe business owners and retirement planning. So let's shift to business owners first. What's
Sure.
changed there?
I would say a lot of things, but first, the qualified business income deduction has increased from 20% to 25% for those pass-through entities. That's S corps, partnerships, and sole proprietors. That's a pretty big win for sure.
Yeah, and also new deductions for employers offering retirement plans, right? So if you set up a 401k or a simple IRA for employees, you can qualify for tax credits up to $10,000 over a 3-year period.
That's for new startup plans, right? I believe.
Correct.
Yeah.
Yeah.
Okay.
Defined benefit plans, cash balance pensions are looking even better in this environment. Also, high income professionals should strongly consider them while rates are still in this favorable scenario we're in.
Yeah, I think one of the biggest takeaways that I got out of this thing is that it's kind of a pretty big wake up call for business owners and a way for them to potentially consult their their professional network and just revisit the way that their entities are structured, take a deeper dive into the retirement plans, what sort of retirement plans are they using if they haven't established one. Now obviously it's always a great time to establish a retirement plan, but now even from a corporate level and a business owner standpoint, just with the incentivization, it seems to be a good time to revisit all that stuff, I would say.
For sure.
Yeah, you're going to get incentivized to become more favorable of a employer, better benefits for your employees. It's going to make you, a better option when they're considering potential employment with you, for sure. We're doing different entity reviews currently. In some cases, moving from an LLC to an S corp structure can result in savings as well under the new rules.
Yeah, that's a good point too. Let's see what else we kind of dig out of this thing. What about let's maybe estate planning, any sort of gifting opportunities that the bill kind of changes. I mean, I know estate planning saw some notable changes. Kind of for our higher net worth kind of listeners, what do they need to know as far as the changes?
I think the big one was the estate tax exemption has increased to 26 million. It was that's up from 25. Doesn't sound like a big deal, but clearly it gives them more wiggle room. If the 25 million expired, that could have went down to, I don't know, what was it before, 5 million or so? I mean, whatever it was, just considerably lower than where we are today.
Well, I mean, it was potentially going to sunset, right? I mean, that was a huge discussion that we had with our clients in the last couple of years, was getting your kind of estate plan.
I feel like we played that game over the last 15 years quite a bit, where we think it's going to go away and then it kind of comes back.
Yeah, for sure.
So
yeah, there was discussion it could go as low as like $2.5 to $5 million if they let it expire.
For sure.
So, this is definitely, though, a key window of opportunity. We don't know how long the provision is going to last, right? So if you think about making large gifts to children or funding trusts or something, that might be something we should have discussions about now before there's additional changes to that law down the road.
Yeah.
Yeah. As I said, like grant or retained annuity trusts or GRATs, family limited partnerships, even irrevocable life insurance trusts are kind of being talked about again. So those tools kind of help shift wealth while, still keeping control and trying to minimize taxes for estates and families, for sure.
Yeah. Also with that, should probably mention the annual gift exclusion. Still, it's 18,000 a person, right?
Yep.
Yeah. And then so married couples can do 36,000 kind of without touching the lifetime exemption there.
For sure.
Maybe let's kind of dive into, just for like immediate purposes, or like, focus on the now. So maybe some strategic planning moves for clients or prospects for 2025. I mean, just kind of getting practical. What planning moves do you guys think our listeners kind of should consider, this year, right? I mean, I know we're in July, but
yeah, I think, we running a projection for the middle of the year, just kind of thinking where you are, what kind of maybe distributions you might have towards the end of the year, those kind of things, see where that puts you in the new brackets, and making sure that you're making wise decisions when you do that, for sure, before, the end of the year.
Yeah, I think another thing you can do is, and there's been a lot of discussion of this over the last several years, but, look into Roth conversions again. So with the lower tax bracket this year, does converting funds from a traditional IRA to a Roth, is there any benefit to that long-term for you on your taxes?
Yeah, I think that's a good point to Scott too, with just kind of taking a mid-year look at where projected income, AGI, where we're going to fall as far as tax brackets. I mean, certainly we are not tax professionals, but know enough to be dangerous, but obviously, taking a look, and to Adam, to your point, the Roth conversion topic, I think now is very timely, because we've got, 6 months left in the year, 5 months left in the year. And so just kind of getting a better understanding of where you're at, and does it make sense without kind of bumping you up a bracket? Yeah.
I think too, like looking at charitable giving, with standard deductions getting so high, a lot of people are kind of unaware that it's great to give, but maybe you're not getting the tax benefit of that.
Yep.
So you might want to just kind of look at, maybe you need maybe do a couple years worth at a time or something like that, depending on what's there, to help kind of make sure you're actually getting, getting the tax benefit of it. And also, donor advised funds clearly are perfect for that scenario for sure.
For sure.
I think you can also, before year end, we should be looking at portfolios and looking for tax loss harvesting opportunities. So, do we have some big gains in our portfolio that we'd like to rebalance? Are there any losses in there too that we could sell off to offset the gains on some of the other pieces so that we can rebalance some of those funds strategically and be in better set moving forward?
Yeah, I mean, it's double-edged sword, right? I mean, it's the market right now as we're recording, it's basically at an all-time high. So, not every
Right.
position is up. I mean, that's not how it works, but
For sure.
it is a good time to kind of look at, those positions that, have astronomical unrealized gains and potentially offset, by selling some losses in the portfolio to kind of help mitigate those. That's a good point.
Yeah.
I think for business owner clients too, maybe like revisiting like their structure, their payroll, right? So taking more in distributions than salary can, help lower your self-employment tax. So if it's structured correctly. So
For sure.
that might be something else to
Always,
revisit.
yeah, talk through that with your accountant for sure.
Yep. And then, so I guess as far as big picture here, as far as the beautiful tax bill and kind of how it relates to investors. So just kind of zooming out for a minute. I mean, what is the big picture here, for long-term investors, I guess?
Yeah, I think adaptability, right? So this bill reinforces something we always work with our clients, and it's you should build a portfolio and a plan that's adaptable, right? Market, tax law, and personal circumstances are going to change. So we need to have a good plan that can evolve with those changes.
Awesome. Yeah, this is we don't want to make knee-jerk decisions. We want to sit down with us, your advisor, look at your tax landscape, maybe with the help of an accountant, and just make smart, coordinated decisions.
Yeah, I mean the legislation, like most all legislation, obviously it's pretty complex, right? And it's probably going to be ever changing, like most legislation. And so the minutia, right, the details are really kind of what matter, right? But the message is pretty simple. I mean, there's new legislation, so we can kind of use this moment to revisit the plan, right? Plan ahead, make sure we got all of our ducks in a row, even consult with, your team of legal professionals and tax professionals, which we tend to do annually with all of our clients. Just a good time to kind of revisit everything. So final thoughts, maybe a call to action here. I guess if you're a current client, it's probably the time to reach out, schedule your mid-year planning session. I know Tracy and Destiny in our office are reaching out to our clients as we speak to kind of, set our meetings and kind of reevaluate our goals and our plans on how this kind of the tax bill could change some things. And we've been trying to walk our clients through, the tax bill, exploring any opportunities that we haven't uncovered because everybody's obviously situation is unique, right?
For sure.
This tax bill is not going to relate to everybody the same way. But there are some advantages and disadvantages.
There's going to be more information that continues to come out, right? We're
For
going to get
sure.
white papers
For sure.
after white paper for the next months,
Yes.
updating us on opportunities here. So we'll be
Yeah.
watching for that.
Yeah.
And I would say too, if you're not a client yet, let's change that, right? Visit financialpartnerinc.com and book a consultation, right? We're not going to charge you. It's a complimentary consultation. And I think this bill is just a reminder that, planning is essential. We need to have a plan that we can build out. We can make changes to it as life happens, as government laws change. Let's work on that plan together.
Awesome.
Thank you for joining us. We'll be back soon with more insights, strategies, and market updates. Until then, stay bullish.
Thanks, guys. I'm Corey Marlowe.
I'm Scott Hardman.
And I'm Adam Johnston. Thanks for joining us on this episode of the Bull Time Investor.
Take care.
The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Securities and advisory services offered through LPL Financial, a registered investment advisor. Member FINRA SIPC.